Yeah, for sure. I think after Columbus 5, we're going to see sort of the beginning of Terra Autumn. I called it Terra Fall at first, but people pointed out it doesn't sound very good, which is true. So it's Terra Autumn. I think we'll see the start of Terra Autumn, and I think there's a bunch of kind of primitives coming together to enable that. So obviously Orion's launched, they hit their cap really quickly, and I think as they grow, they're going to continue to sort of be this black hole, absorbing stablecoins from other chains.
All right, guys. My name is Bobby. I'm the co-founder and COO at CoinGecko. Today we have three really distinguished guests, and we are talking about the Terra ecosystem today. The theme of the meetup today is exploring the Terra ecosystem. Every month we do this meetup at CoinGecko. We've explored a few different ecosystems. We've explored the Ethereum, BSC, Polygon, Solana ecosystems, and this time around we have the Terra ecosystem. So for today, we have three really distinguished guests. We have 0x Wagme, the ecosystem lead at Terraform Labs. We have Jose Macedo, partner at Delphi Digital, and we have Pigrukh, co-contributor at Orion Protocol. Thank you very much, guys. Welcome to the CoinGecko meetup.
Great to be here.
Thanks very much for having us.
Yeah, happy to be here. It's just Orion money, so we are different projects.
Oh, sorry. My mistake on that. So yeah, guys, thank you very much for all you guys listening in live on Crowdcast. We have over 1,000 people live on the CoinGecko meetup. This is meetup number 15. We started doing our meetup right after COVID hit. Last year, we couldn't do any more meetups, physical meetups. So we started moving everything online. I'm very happy that we've done this 15 times. So yeah, thank you very much for listening in. This time around, we are having this meetup 9 p.m. in where we are in Malaysia, and it'll be sometime in the afternoon in Europe and sometime in the morning for those in the US. Without wasting further time, would like to jump right straight into the conversation today. There's a lot of things that we would like to talk about Terra. It's a growing ecosystem. There's so much thing going on. We have three experts on the show, and yeah. So I guess let's start off this session with a simple question, right? I'm going to give the chance to you, three of you, to introduce yourself and tell us what do you do, what does the company do in the Terra ecosystem?
Yeah, I can kick things off real quick. So I'm the ecosystem lead over at Terra, and basically I get to work with a lot of third-party projects in the ecosystem. So as you guys know, Terra is interesting in that not only does it operate kind of like the stablecoin kind of business, but it's also this layer one protocol. So what I get to do is kind of talk to anyone that has an interesting use case for this decentralized stablecoin UST, whether that be like a traditional fintech or someone wanting to merge traditional fintech and DeFi, or something a lot more DeFi native. And then also on the other side of that, work with projects that want to take advantage of the layer one opportunities that the Cosmos SDK and that Terra provide to build their own kind of smart contract based businesses. So in the past year or so, I've really come on board to manage what is an explosion of interest, both for stablecoins and also to develop smart contracts to run new protocols within Terra. And a lot of things have been built at Terraform Labs over the past few years, and we're trying to enable much more building, and it's really only the beginning. And so it's really exciting time, and yeah, it's been super fun.
Well, you want to go next?
I don't mind, wherever is easier. Okay. So I am core contributor at Orion Money, and at Orion Money, we are building what we call cross-chain stablecoins bank. This is to make easier depositors of stablecoins to put their stablecoins to work on their native chain. So let's say you're on Ethereum and we have easy to use DApp. With 2-3 clicks, you can deposit your USDT, USDC, or DAI and earn fixed yield directly from Anchor on Terra. So essentially, we are bringing Anchor to other chains. And also we'll have more features. We'll have native insurance, higher yield products, and also fiat on-ramps and off-ramps.
Nice. Yeah, I'm from Delphi Digital. So we have three main business lines. We started off as a research firm. That's kind of how we built our name. publishing a lot of institutional grade research for our clients. And then we have two other business lines, including labs, which is the bit that I head up, where we started off consulting with top projects in the space on designing their token econ models like Aave, Synthetics, Axie Infinity, Yield Guild, and a bunch of others. And then now we're pivoting that more towards incubating projects and really being hands-on at an early stage with projects like Orion, actually, and like others like Mars and Astroport in the Terra ecosystem. And then we have a venture fund, which is fully our own money. And so across Delphi, there's about 60 of us. And at labs, there's 25. And so the way we found the Terra ecosystem was actually through the research business. So we covered Terra earlier this year. We'd been into algo stables for a while. We all lost money on ESD. And so we're particularly interested in kind of looking into algo stables and realize that it's not really a question of mechanism. Like almost every mechanism has been tried. Like the mechanisms kind of at a high level, it's simple. It's more a question of demand, like creating actual demand for the stablecoin. And what we saw with Terra was that it was an ecosystem that actually had demand for its stablecoin, where people were actually using this thing to do stuff other than speculate on expansion phases. And so we got really interested, took a position with the venture fund, and then with labs realized there was a lot of opportunity in the Terra ecosystem in terms of primitives that needed to be built. And so set out to start helping sort of fund and incubate projects that are doing that.
Thanks a lot, guys, for the introduction. So, Jose, you brought up a very interesting point about there being demand for Terra stablecoin. I was involved in all the algo stablecoins as well. Most of them just went down to zero, like ESD and all. But Terra's kind of different with its UST stablecoin, and I believe Terra started out with the Korean won stablecoin KRT before that, right? So I'm curious to hear, and this is open for all three of you. What are some of the main use cases of this stablecoin? What are the demand? Why do people want to use UST KRT instead of there's so many other like USDT, USDC, DAI, so many other stablecoin? Why UST specifically? What's the demand?
Yeah, so Terra's always started off with a focus on utility over sort of speculation, which is weird for an algo stable because normally they start off as speculation games, right? And the whole theory is that it starts off at a speculation game, but at some point the speculation bootstraps enough market cap and liquidity that they can actually be stable coins. That hasn't played out yet. So with Terra, it actually started with utility, right? It started with Chai, which was a payments app, or is a payments app that still processes a couple billion in annual volume. And then it continued with TFI, right? With Terra's DeFi ecosystem, which I guess is the main source of demand right now for Terra's stablecoins for UST. So farming, and a lot of it is sort of farming demand in terms of like there's a lot of speculation and expectation around the value of these primitives on Terra, which I think is deserved actually, given how important kind of a censorship resistant algorithmic stablecoin is. And so the way I see it is there's kind of two worlds developing in tandem that will one day unite. There's sort of the DeFi native like Terra ecosystem of like Mirror and Astroport and Orion and Anchor and all of that are sort of serving the DeFi native user. And then there's apps that are trying to link that to the real world, right? Like Terracato and Sabera, which lets you pay for subscriptions, and obviously Anchor with its savings account and stuff like that. And the way I see it, both of those will eventually unite such that you have a DeFi ecosystem that's incredibly usable with a great user experience. And you can also spend that in the real world via these people like Terracato and stuff that are building kind of the real world integrations. And so I think those will be kind of the two main sources of utility once those kind of join up, because you'll have the best of both worlds, right? You'll be able to spend your UST, use it in the real world, but also have access to a decentralized and like highly usable financial system.
Yeah, I think Jose put it really well. Like, we're kind of in an interesting place where it's like pre-crypto backends for a lot of traditional finance or even fintech companies. Like you'd expect most fintech companies to have some sort of like crypto business. Say your Revoluts of the world, your Venmos, and they're starting to think about it, but it's kind of like not at its inflection point yet. And so you have new businesses like Orion that are trying to build these like DeFi native products because a lot of these businesses don't know how to do like crypto native banking, but Terra and the stablecoin, that powerful primitive is really there. So when we do reach that inflection point, which we think will happen, is every business will have this like crypto backend part of their operations and their engineering and product, and they're going to need like a censorship resistant kind of like stable coin to operate that business. Now it could be like another stable, which has a different model. But the really interesting thing about Terra is it comes with this whole DeFi ecosystem attached. So it'll be really cool once you have like deposits in like your traditional fintech application that are powered by UST, and then you can also access kind of on the back end this whole other world of DeFi. And I think that'll be a powerful bridge. And it'll be interesting looking back, like pre that happening and post that happening, because there's going to be like a adoption inflection at some point there, which will be interesting to see. And I mean, this is Vol's whole world and the vision they're building. So I'll let them talk more about that one.
Thank you. Yeah, definitely. Those are really great points. I think it helps you understand a little bit where Terra and UST, so Terra money is. It's still very early. Like literally all this adoption from real world came from Chai payments processing app in Korea. And then you have Anchor and Mirror. So literally like two protocols, as Jose was saying, only in the Terra ecosystem. And there is over 50 other apps will be launching within like next 6-12 months on Terra, which will bring even more adoption and utility for the UST. So from our side, what we see that we're still very early. UST has just a bit over $2 billion in market cap. And what Orion is doing, we are bringing UST and Anchor to other blockchains like Ethereum. And you have over $100 billion in Ethereum stablecoins there. So this is the initial increase in UST that we see from like 2 billion to the big share of those $100 billion. And stablecoins will continue growing. It's as Vagmi is saying, actually all the fintech apps in a few years' time, they will need to have part in crypto because it generates such a higher yields than the real life in the banks that you can do this. So this is the future that will come to in a few years. And it's exciting to have this opportunity for UST to continue growing even above $100 billion and so on in the future.
Yeah, it's interesting, Wagmi, you brought up a point that is that all fintech apps will start to breach the USD deposits into crypto. I mean, it almost seems that we are kind of living in a two-tiered world, like the TradFi world, where everybody's really happy to get 1% interest on their USD deposits. And then we have this crypto world where everyone's saying 10% is like so low, you're not going to make it. You're going to have like 20% at least on your stablecoin deposits, which is kind of what you get on Anchor, I suppose. Yeah. I guess for many people, right, like people who are not familiar with crypto, they're going to say like, where are these yields coming from? Like, are you guys doing some sort of a money game, some sort of MLM? Are you kind of scamming people? How can you generate like 20x more yield in crypto when the banks, the regulated entities are doing just 1% at best, right? So I'm curious to hear, like, for example, Anchor, like, which goes around, I mean, for most DeFi apps, the yields are sort of depends on the demand and supply for the stable coins, right? So there's more demand, the yields go up. But for Anchor, like it's sort of fixed at 20%, right? So it will be interesting to hear from one of you guys, like, how is that possible? Why is the yield fixed? Why is this mechanism done this way?
Yeah. So I mean, like, I think Go and Anchor and the Terra team is probably one of the strongest product teams in crypto. I think that's like under indexed. Like, I think the reason it's at 20% is because it could be. So they kind of work back from like the user experience piece, like what would be 10x better, and they kind of settled on this number of 20. I think there was some speculation pre-Anchor drop that it would be like 10%, right? But it actually ended up being 20. I think it's just because like the team saw the enabling technology was there to actually make it like 20% plus. And they realized like, okay, if you're having these over collateralized loans and you're getting like a proof of stake reward and there's like this liquid nature of it, you can actually back up like a 20% yield with these programmatic incentives in place. And I think that's what kind of enabled this whole thing. And then they just realized, okay, if we fix this at a stable like 20%, the demand will just be so high. And then the incentives on both sides from both the borrower and the lender perspective, they kind of auto balance in a way with a reserve kind of portion that'll always keep that 20% peg. Now that possibly goes down in the future, depending on how proof of stake kind of evolves. But I think this kind of like anchor stable yield is just kind of an amalgamation of a lot of emerging trends in DeFi that just happen to coalesce for a really great like end user experience.
Yeah, I would echo a lot of what Wagmi said. I think one of the impressive things about the Terra ecosystem is sort of Do and Terraform Labs combination of like understanding of protocol and like technicals of kind of building a protocol, but also product vision. Like whereas these things are actually good experiences to use. When you use the Terra ecosystem and use Terra Station, you interact with it, you realize it's probably the best experience out there in DeFi, right? In terms of the combination of good UX and confirmation times and stuff like that. And Anchor is kind of an innovation like that, where in a way it's like a constrained money market, right? It's like a constrained version of something like Aave, but the product that it provides is incredibly useful because the way I think about Anchor is it takes kind of the most stable yield in crypto, which is the proof of stake yield, and productizes it into UST savings account for users, right? So on the demand side, you have people who have proof of stake assets and are willing to give up some of their yield, which allows Anchor to be able to subsidize a 20% rate at all times, even when utilization is low, right? You don't need to depend on a lot of people wanting to borrow to subsidize that 20% rate. And what we're seeing with that is it creates like a new primitive, like because if you know how much yield you're going to be getting for the next year, suddenly that creates like a new primitive that apps can use, whether it's Pylon or in order to buy into token sales, or whether it's something like Sabera to have your self-paying subscriptions. It allows you to do all sorts of new things. And then in terms of where the yield comes from, I think there's kind of three sources. The first one is just like demand for leverage, right? There's just like a lot of good trading opportunities, farming opportunities in crypto, such that it's costly to have assets that are unused. There's very little you can do with like proof of stake assets, and so Anchor turns out to be like one of the best options in terms of generating yield for them. And just demand for leverage in crypto is going to stay really high, I think, for the foreseeable future. I think the second is there is like an efficiency gain from stuff like this. Like if you think about what you're doing with a money market, you're like getting a loan, but you don't have all the infrastructure that a bank would have, right? That would need to have in terms of assessing your credit, big facilities, all that kind of thing. Like all those middleman fees are basically kind of cut out with these systems because they're not. It's peer to contract, but yeah, it basically enables peer-to-peer interactions. And I think the third one that's kind of under discussed is just that. Obviously, the yield farming incentives are what drives a lot of this use, but that's because, if you think about a public company like Coinbase or whatever, like the founders will own like 40% plus of the company, and that's not going to happen with any DeFi protocol, right? These are going to be owned by their community, by the people that are farming them now and accumulating and stuff like that. And so it makes sense that would create value, right? Because if Anchor becomes a core primitive of the new DeFi economy, then it makes sense that the tokens are going to be worth a lot, and it makes sense for people to farm them and to have high expectations about their future value. So I think that's kind of the third one. It's just that in using these things now, you're actually getting an opportunity to own them. And if they're as big as we all kind of think they can get, then that's a pretty big opportunity.
Well, do you want to add on anything or?
Yeah, just very quickly. So those are definitely great points. And we get asked about where Anchor protocol gets its yield very often, like literally every time when we speak to somebody from Ethereum. Our explanation is relatively simple. So essentially, it's a saving account that is powered by the proof of stake chain's assets. So right now it's Luna and recently added Ethereum, but there will be more assets. And essentially, like miners, they get revenue and profits from mining Bitcoin and Ethereum. Everything is moving to proof of stake, or at least many protocols will move. And this gives ability to pay this 20% rate by getting the rewards from proof of stake. So this is how we see it's becoming more and more widely available for other chains as well.
Do you think like something like Anchor, this product idea on Anchor, a fixed 20% interest rate idea could work on an EVM chain like Ethereum or Polygon, for example? Or is this kind of only specific to Terra?
From our view, just very quickly, and happy for guys to answer as well. Right now, Anchor protocol is quite unique in this space because of all the mechanics that Jose explained and so on, leveraging proof of stake assets for collateral. But likely, especially with Ethereum version 0.2 coming and so on, there will be more and more money markets like this that try to leverage proof of stakes. Cosmos and Terra specifically definitely have advantage over Ethereum in the fees and like quick finalization of the transaction. So this helps. So I would say Anchor protocol is the first probably of many money markets that will be powered in future by proof of stake assets. I don't know, Jose, what do you think?
Yeah, I mean, I think Anchor is like in money markets generally, they're pretty chain agnostic. Like I think eventually it's going to be basically a cross-chain experience where you can just, there's going to be like cross-chain wallets. You just sign up seamlessly. They sort of honor some like canonical implementation of an asset on each chain, right? Whether it's like UST on Terra, UST on Solana, you can kind of deposit from any chain and borrow to any chain, I suspect. I think the real thing that is unique about Anchor and the I think needs to stay is the UST at the core, right? Because you couldn't really, so the options are you either use an existing stablecoin, and I think all of the existing stablecoins are either centralized, backed by centralized collateral, or just not stable, right? So like the algorithmic ones are just not really stable coins. And then the other ones are like DAI, which is the most successful, is backed like nearly 50%, right, by sensible assets. So I think UST is kind of the only option right now. There's really interesting experiments with Rye and Frax and stuff, but I think UST is kind of the only option right now. And so I think that needs to stay at the core of it.
Yeah, I was talking to you, Wall, before this call. Like, I mean, if you think about it, like the use on Ethereum has kind of gone down. I mean, similar to the idea of like use on traditional finance versus use on crypto, it's a huge gap. But like if you compare the use on stablecoins on Ethereum versus on Terra, like there's a huge gap as well. And then as we kind of embrace more multi-chains and more chains in the future, we start seeing these rates deviate. And I think the ecosystem definitely needs something like Orion to kind of stabilize all these rates across different chains, because it's just, I mean, the market can do it, but it's just a painful process, I suppose. And a lot of people may not be familiar with the Terra ecosystem, for example. So it's quite interesting what you guys are doing. And I don't know, are you guys planning on different chains as well? Or is it kind of like just Terra's kind of the only one that you guys are planning right now? Yeah.
Yeah, thank you, Bobby. We're starting with Ethereum, and we see Ethereum protocol as our main target market, with like close to $100 billion in stablecoins market cap being there. But we'll be expanding to other chains as well. So the Binance Smart Chain, L2s like Polygon, and we'll have also DApp on Terra too. So I completely agree with you that the future will be multi-chain future. And right now it is quite hard and also risky to bridge between different protocols. But as more and more technologies come to the market, it will become easier and easier. And we want to lead in this and to become essentially big connecting protocol for these yields, bringing these yields from Terra, maybe some other chains, to the target market. So to where people are the most, like on Ethereum and other chains which have many stable coins. Yeah.
I guess my next question is for WAGMI, right? So there is UST, and there's also Korean one, KRT. There's also a Mongolian. I can't remember what's the Mongolian dollar of some for on Terra as well. Like, are there plans to also launch other stable coins for other fiat currencies, or what's kind of the plan? I mean, it seems like UST is like the ones that are getting all the attention these days.
Yeah, I mean, like the reason like the KRT and UST are popular because there's a lot of demand for them, right? Like the KRT demand kind of comes from it was bootstrapped by Chai, right? Because the e-commerce business that one of the original co-founders of Terra, Daniel, started was particularly competitive. And so you have this low gross margin business and you have payment processors taking 1 to 2% of your bottom line, depending on your processor. And so you build a different settlement layer with the blockchain, and so you can preserve some of your business that way. You give out incentives. You basically build like a Cash App or an Alipay type experience in Korea, and you have a lot of payment processing volume going through that. So you basically bootstrap a lot of demand for the one backed stable. Now you could do this with really like any type of like stable asset, right? Like I believe meme pay in Mongolia is also like a very popular option, but an entrepreneur had to like go out and kind of bootstrap and build that business. The KRT demand was kind of native to Terra and the founding team. UST, I mean, that was a lot of dough, right? Like one of the really great like DeFi entrepreneurs kind of going out there and saying, okay, we need Anchor, we need these different experiences that bootstrap this demand. So I think we just need more people to think through like, okay, what could I do with a stable backed, a stable in this country or in this form, and like what kind of experiences can I build around that? And you can leverage some of the existing experiences. I'm sure Bol and his product team think through this pretty deeply, but the demand kind of has to be there. And so, yeah, I think that kind of becomes a question of talent at a certain point and who's coming in to, create utility out of like liquid stables. But I think it'll get there. We're still pretty early.
There's a lot of talks these days, like with regards to stablecoin regulations, right? So curious to hear from you guys, right? What do you think? Do you think like stablecoin, and we're starting to see like some teams starting to launch stablecoins. They are not really stable, like it's not pegged to the USD, for example, because they want to go around regulations, for example. Do you see regulations kind of crushing the stablecoin market, especially the USD stablecoin market, for example, Tether, USDC, DAI, UST, for example? Do you guys see this as a threat, as a risk for any of these stablecoins?
I think, Jose, you had a great threat on this in relation to UST, right?
Yeah, I definitely think it's a big risk. I mean, in the most recent sort of regulatory reports we're seeing, they actually talk about any stablecoin that's pegged to the dollar at all being sort of under their jurisdiction, right? So that would actually include UST. The issue, I guess what I think is that the centralized stablecoins are much more vulnerable and kind of easier to regulate than UST, right? Like it's literally like USDC and USDT, which are the lifeblood of DeFi, are literally just IOUs for dollars in a bank account, and they can be frozen at any time. They have been frozen previously. We saw that with the hack recently, right? Tether, like Paulo just froze the account, froze the Tether in there, which, obviously that's a scenario in which it's being used for good, but it's that means that power is also within reach of a government, right? Like they have to do a subpoena, they can freeze bank accounts, they can coerce entities. And so I think those will be much easier and quicker and they're regulated businesses, right? Circle and Bitfinex are like regulated. Well, Bitfinex arguably, but they're both regulated businesses, and so they're much easier to reach than like a proper decentralized stablecoin. And then the other thing I think is that in a world where there was a lot of pressure put on sort of dollar pegged stablecoins, like Terra can actually peg to anything, right? There's nothing specific about the mechanism that only works for the dollar. If we came up with what Sam Kazmine talks about of a crypto native CPI, or if something like a less volatile version of ETH became the crypto benchmark, like what Reflexer's doing, then Terra could theoretically peg to that as well, and the mechanism would still work. It's all about, like everyone else said, what are the assets that people are demanding, right? And right now it's clearly the dollar. Clearly the dollar is the most demanded asset, and that's really Terra's product. But if that changes because the dollar becomes increasingly regulated, because US monetary policy goes crazy, then Terra can also change, right? And yeah.
Yeah, very, very interesting insights on that. Yeah, I definitely think it's a big risk. Really interesting to see how regulators regulate this space. It's kind of shitty thinking about how all these stablecoins, some of them are buying like junk bonds and all, and supposedly saying that it's worth $1. That's kind of scary, and they earning so much yield on those things. But But yeah, I think it'd be interesting to see how things go. I hope things progress in a more progressive manner, especially when it comes to regulations. So I'm gonna pick some questions over here from some of our listeners. For those of you listening in, if you want to ask some questions, just feel free to put your questions in the chat box. So there's a question from Ryan, and this is a bit on the far side, right? So there's a coming update on Terra, which is a Columbus 5 upgrade. Maybe this is more for WAGMI, maybe. Can you talk us a little bit more about this update and how it impacts the ecosystem?
Yeah, so I think Columbus 5 is really interesting in that it's one of the first kind of like implementations of a lot of what Cosmos and kind of the Cosmos vision has been building to over the past few years. Cosmos is really interesting because it's just a different model for decentralization, and it basically uses like a hub and spoke model for blockchains to enable kind of like horizontal change. And I think it's best described. I think Doe has said this in the past as like a scaling solution. So instead of having like these layer ones and layer twos, you actually have like these parallel blockchains that are all interconnected. And it's only finally now going live. And I think that's going just to be a really big boon for the whole Cosmos ecosystem, with Terra kind of playing a major part as both facilitator of stable assets, but also as a layer one blockchain. So every Cosmos implementation that runs, for example, like a smart contract toolkit like Cosmosm can now support smart contracts and all communicate via IBC. So you can have asset transfers between, maybe an application specific chain just for gaming, or a stable asset or DeFi specific chain like Terra, although we're not just a DeFi specific chain. There will be application specific chains that kind of emerge with their own kind of designs. And I think that's kind of the vision that Cosmos has been building to over the past few years. Columbus 5 enables a lot of that. And I think from the kind of contract developer standpoint, with the newest version of the smart contract toolkit, Cosmosm version 0.16 plus IBC, I think the whole kind of universe of applications is opening up. And I think, Delphi is definitely taking advantage of this from the lab side, incubating a lot of interesting projects. And we're just seeing a kind of burgeoning of developer activity, which we really find super interesting. And again, it's still pretty early as we have not gone live yet.
It's interesting that you brought up a point on developer activity, right? I mean, Terra's coded in Rust and Ethereum's mostly in Solidity. If you look at developers' interest, like most of the developers, when it comes to blockchains, kind of mostly in the Ethereum, the EVM compatible space, right? Do you think that the Terra being coded in Rust kind of create a barrier for Solidity developers and Solidity apps to be ported over to Terra? I mean, maybe like if the EVM app is kind of what they want to, developers want to bring it over to Terra, like how hard is it? Like, and then what are you guys doing to kind of spur to encourage more developer apps on the Terra ecosystem?
Pretty interested. Go ahead. I was going to say, I was interested what Delphi thinks from like running a product and engineering org that deals with these issues day to day, but I'm not going to lie, it's really tough stuff. I think anyone who's like an expert here is going to be like a very valuable team member in the future. But I also think teams that are really thinking through kind of the future of their product and engineering orgs do want to think about like WebAssembly based smart contracts. They want to think about, future talent pools. Like Rust is the most popular language on Stack Overflow, many years running. I think we're still early in terms of like the developer tooling infrastructure. And so it's very difficult to say what is going to stay, but standards will emerge, at least with Cosmosm and Terra smart contract development. Those standards just haven't emerged. So it's the developer experience is not like our customer satisfaction for like the user end of things, I would say is like a good 80% plus. For the developer side of things, it's lower than that. I would say it's maybe like in the 40 to 50%, whereas like, being a Solidity developer is much easier. But again, it's early, and I think standards will emerge, and there are some major benefits, I think, long-term for adopting these types of smart contracts. But yeah, really interested to hear what Delphi has experienced kind of working in this world.
Yeah, great answer. I think EVM compatibility is obviously like a huge advantage to kickstart activity on chains. You saw that with BSC. When you make it easy to port over, it's very easy for people to just port over their dApps and kind of get going straight away. But I think it's hard to think that it's not a long-term disadvantage, right? Like there are orders of magnitude more Rust developers in the world than there are Solidity developers. Like it's just that we're extremely early, and the majority of devs in the space are Solidity developers. But I think first of all, they're very expensive. It's a very highly sought after skill set, and there's just not many of them. And so supply and demand it makes it very expensive, which makes innovation harder. And then the other thing is that it's just an extra layer of friction, right? Developers have to come in. Not only do they have to learn smart contract programming as a paradigm, which is a bit different even from backend stuff, but they also have to learn an entirely new language, right? Whereas with something like Terra Solana, you come in and it's Rust, so you just have access to it. It just lowers the friction, and I think long term, it's actually like a massive advantage. And even in the short term, you see less copycat clones and more like real innovation because you have to rebuild your app from the ground up, right? And there's no way to port over. I mean, on Solana, it sounds like Neon's gonna kind of allow for that, but they're still not going to be like those dApps are just not going to take advantage of Solana in the same way, right? Because to really take advantage of the chain, you need to kind of build in its native language and build it in the way that takes advantage of that chain's kind of specifics. So yeah, I mean, our experience actually building on Terra has been really good. Like Cosmwasm is actually like a really, really useful language. I think we had a few developers who came over from Ethereum and actually said they're having a better experience building on Cosmos. But yeah, that's kind of my view on that. I think short term it's a disadvantage, but long term I would see it as a massive perk actually.
More anything to add? I mean, do you code on that?
Yeah. No, definitely that makes sense. So in our case, we are a bit unique because we are Terra project, but we are building on Ethereum. So we have 2 developers very experienced in Solidity. But the rest of our dev team, so other 7 developers, we brought them into crypto from tech startups, from like tech world. So I can relate to what Jose is saying and Wagmi as well before, that Terra has advantage for more developers, non-crypto developers coming and joining Terra teams. And it might be hard at the start, or right now, but it will be much easier as the protocol grows and more developers come on board, because it's much bigger pool of developers that can join than just Solidity developers.
So I was going to ask you a question on hiring, right? Was it easier to hire these Rust developers and train them to code in Terra than finding these 2 superstar dev in Solidity? Because I mean, the joke is that every Solidity developer is a millionaire, so it's really hard to recruit anyone, right?
I can say from our perspective, yeah, it's at least partially this is right. The Solidity devs that we have, they really experience and they command high demands. They know their value and the value is high. So our approach that we've taken them, and also we have our own network of developers from the previous startup, and we brought those developers that we know already long term, that we know that they are reliable, they are hungry to learn, they want to learn, and they are ramping up actually very fast. So like within a few weeks, they already started to work on some like secondary features and so on. So we think this approach might work very well for other startups too.
Mm-hmm.
Yeah, we're seeing the same thing. Just to add to that, in terms of recruiting developers from the real world, if you find like a really skilled developer, especially a really skilled backend developer that's smart, they can generally grok smart contracts very quickly, because so we're kind of seeing that as well, where it allows us to recruit more traditional developers with traditional backgrounds that haven't necessarily built smart contracts before, and kind of educate them on how to do that, and to pick it up very quick, and you tap into a whole new source of talent. Because the Ethereum thing, the kind of Solidity developer premium is a genuine problem, right? It's really difficult to build anything new, and the developers are millionaires that have high opportunity costs, they have loads of opportunities, they're generally working on multiple things at the same time, so it makes it quite hard to build things long term and to build kind of important infrastructure that just, for example, might not monetize as quickly. Like I think that's why we have like a dearth of governance tooling, for instance. Even though it's super important, it's just like not an AMM where you can just spin it up quickly, do volume, and have like a liquid token straight away. And so yeah, I think it's a really important point, like bringing in more developers from the traditional world. And one of the things we're thinking through doing at Delphi, obviously we organize the hackathon where actually we met Orion. And then we were thinking of also doing an academy program where basically we take people through development, like a 3-month course or so on development, and then hook them up to work on our either at labs or at our incubated projects.
So I'm curious to hear from you, Jose. You guys are incubating a lot of Terra projects, so you know what's coming up next in the Terra ecosystem, right? So curious to hear from you, what is coming next in the Terra space? What's interesting that we should sort of be excited about in the next few months or next half a year, I suppose?
Yeah, for sure. I think after Columbus 5, we're going to see sort of the beginning of Terra Autumn. I called it Terra Fall at first, but people pointed out it doesn't sound very good, which is true. So it's Terra Autumn. I think we'll see the start of Terra Autumn, and I think there's a bunch of kind of primitives coming together to enable that. So obviously Orion's launched, they hit their cap really quickly, and I think as they grow, they're going to continue to sort of be this black hole, absorbing stablecoins from other chains into Anchor and into Terra, effectively into UST. So I think that's going to be continuing on for the next year, just like sort of a relentless kind of absorption of stablecoins from other chains as people realize the yield is higher and all of that. And then I think as AUST grows, driven by Orion, which is kind of like exporting the Anchor savings rate to other protocols, Anchor will continue to become just the go-to credit protocol for staked assets. You've already seen it with the uptake of BETH. I think once BSOL launches and then BDOT, it's going to be continuously enabling. And I don't know if people noticed, but Anchor is actually running at a surplus again, right? There was a lot of FUD around whether it's sustainable or not. It's actually running at a surplus again, just with BETH. So I think with BSOL and BDOT, it's going to be pretty interesting and become kind of the crypto's risk-free rate, right? The place where you go to get leverage on your staked assets, and also the place where you go for sort of a stable savings account. And then once Columbus 5 goes live, we're going to have Astroport launch, which is kind of the next version of TerraSwap. It's going to feature like curve pools and LVP functionality and a bunch of stuff like that. And I think it's also going to enable kind of double incentives on M asset farming, right? Because there's going to be LP incentives, which means you're going to have people earning Astro plus Mirror on a lot of their LP farming, which I think is going to kickstart that Terra Autumn. And then after that, like kind of very synergistically, you have Mars Protocol launch, which is like Terra's sort of generalized money market. That's going to enable leverage yield farming. So you're going to be able to sort of earn the double rewards on Astro plus Mir and get leverage on it if you want, right? And for some of the M assets, if the protocol chooses to vote them in, you can have leverages much higher than what you do for crypto assets, just because the volatility and risk characteristics of something like gold or something is much lower than what it is for crypto. So I think that's going to be pretty big, kind of earning double rewards plus leverage. And then after that, you'll have sort of Nebula at some point, which I think is the most interesting index protocol design like we've seen. Jump Trading did a lot of sort of consulting with this, and it's actually like a rebalance that like most index products have just copied straight from traditional finance, right? They just do like monthly or weekly rebalances or whatever, whereas Nebula has like a curve that incentivizes arbitrageurs to come in and rebalance. I won't go into it too much, but I think that's going to be huge, because you're going to be able to have these cluster tokens, which are index tokens. And the way that they're thinking about it as well is that people will be able to do kind of branded indexes. So assuming the assets were on Terra, Delphi could, for instance, do a Nebula like gaming index, right? With our favorite picks in the gaming space, and people could own those and stuff like that, which I think will be really interesting and kind of especially with so the way I see it is like Mirror kind of ports assets over to Mirror, and the cross-chain bridges start like porting assets over to Terra. Orion's like pulling more and more UST in, and then you have all this financial system kind of making them useful and turning them into useful products for users to use. And then obviously you have Levana, which is going to be allowing like leverage trading, so leverage exposure to Mirror assets and leverage exposure to assets on Terra. First with a architecture built on top of Mars, and eventually with perps, which I think is also going to be huge. Perps are like the biggest market in crypto trading. And yeah, it's like suddenly you'll have basically a complete DeFi ecosystem, right? You have sort of synthetic assets, you have exchange, you have a money market protocol, you have leverage, both farming and trading, you have index tokens, and all with an actual decentralized stablecoin at the heart of it. So I think it's pretty unique. And for me, that you have that going on, and then at the same time, you have products like Sabera and Terracato and stuff that are bringing in that real world utility. And as they continue to enable that real world utility, you'll end up having UST, which offers a seamless next gen financial system and real world payment utility, all while actually being like censorship resistant, right? So I think, yeah, I'm pretty excited about Columbus 5 launching and seeing all those launches and the kind of Terra ecosystem develop. And yeah, I think it's going to be cool.
Yeah, it sounds like so much alpha that you just drop on all the upcoming projects in Terra. I almost feel that I have to watch this recording again after this to just kind of really listen in and really write some notes on all the apps coming by in Terra. Very, very interesting time coming ahead. So, yeah.
Yeah, I think I'll do a thread about it at some point, like my roadmap for Terra Autumn.
Yeah, I mean, it's such an interesting time, right? Everyone's talking about Avalanche August, and then we're talking about Solana September, and then like Terraform, Terra Autumn. Yeah, so super interesting time. Yeah. So one of the questions that my team curated as well is NFTs are sort of the hype of this in the EVM space at this point in time. Everyone's talking about Ethereum NFTs. Does Terra support any NFTs, and are there any NFT projects in the Terra ecosystem? Wagme, you want to take this?
Yeah, sure. So yeah, this is actually one I am kind of confused about. Like, we actually have all the like primitives to build out pretty sophisticated NFT products. Like CosmWasm supports like a 721 standard that can be interoperable with like with other NFT standards. But I think maybe it's just because like we're so early stage and Terra is kind of branded in a lot of ways as like a DeFi specific chain. And NFTs are kind of like in a separate category when it comes to like maybe like cultural adoption or something like that. I think that is probably like a branding issue that we'll want to solve like long term. But yeah, all the primitives are there. I think kind of similar to how Terraform Labs had to bootstrap commercial usage of UST with kind of these native DeFi applications that were really built from the ground up to kind of drive adoption, Anchor and these other incubated projects. Might have to do something similar for NFTs, although the goal eventually is to decentralize kind of all the building and enable new builders. Sometimes you do kind of need that kick in a bootstrap. So I think that's just an open conversation. I'm curious if Delphi has seen anything around like NFT building, but we see a lot of like early concepts emerge out of hackathons. Like router contracts, simple like NFT minting. But there are a lot of like there's some sample code out there, but someone needs to lock themselves in a room for a few months with a good team and really build something kind of Terra native and NFT native. But it's all possible. Like all the building blocks are there. And it's something I'm particularly excited about, but yeah, haven't seen anything major quite yet.
Yeah, I believe it's happening. So there's Cody Marks Bailey, who was one of the creators of the ERC 721 standard, is actually working on an NFT standard for Terra. He wants to make it more. Probably you should have him on to talk about it because he can talk about it much more eloquently than me. But he wants to have it be much more flexible than what it is on Ethereum, because he had in mind a vision for it that included like royalties and stuff like that, and more of a financial tool, which I think fits in well with Terra. So they're working on that. And then there's Talus, which came out of the hackathon as well, which is working on an NFT marketplace. So definitely and I know that a lot of the projects we're incubating have NFT strategies that they're working on, which are reliant on these tools existing. So I definitely think Terra is going to have NFTs on it. It should be interesting what that looks like, because I'm obviously like, we're in Delphi, we're all like huge bulls on NFTs. We obviously like bought a lot of Axes and stuff and have an NFT fund. But I also think that a lot of the stuff that's happening on Ethereum is a bit unsustainable, where kind of reminds me of 2017, where I'm as bullish on NFTs as I was on the entire crypto space in 2017. Like, I think it's going to be paradigm shifting and change a lot of ways in which how we interact with culture. But I also think that most of the stuff out there right now is kind of just like not that good, not that interesting. And so it would be good if Terra kind of picks the best of that and doesn't like clog up the chain with like just a bunch of like random NFT drops. Yeah. And I do think it can look different on Terra as well. And I think it will. Like we're some of the incubator projects are working on some generative art stuff that's linked to like on-chain events, which would be pretty cool, where you have like an NFT that changes according to like on-chain actions that you take over time, for instance. And so like gets more unique over time, and where you can even sort of weight like the way the changes happen to how many tokens you have staked or something. Like, I think there's really cool cool token economic primitives that you can create with NFTs and with art. But I think we're just kind of scratching the surface of that right now.
Yeah, I definitely agree. I think NFTs you're going to unlock a lot of different opportunities in crypto, and we're barely scratching the surface on Ethereum. And I think it's just a matter of time before every chain have some sort of NFT, including Terra. I mean, someone's got to do the hard work of defining the standards first. Like, I mean, if you look into Ethereum, 721 is not new. It's been around for, I don't know, three years since 2018 I think mid 2018 or so, when the standard was first defined. So it took 3 years before for the hype became crazy this year. But so yeah, it's just a matter of time, I believe. We're running up towards the hour. So we've got about like 7 minutes more to go. I've got one final question to all three of you. What do you think will need to occur for us to have mainstream crypto adoption in the next 5 years?
Yeah, sure. I'm really curious about. I think there are a few different like hypothetical scenarios. I'm of the camp. So this is a very personal opinion, and I don't know if TFL Terraform Labs has like a official stance on this. I think like you actually only need like a few core primitives. So if you look at like internet adoption, you didn't really need like that much to go vertical. You needed like a few good applications, like email, for example. Like once everyone had an email address. Like if you think about like everyone has a crypto address, like, you know, how do you get from 10 million to 100 million? I think everyone just needs like some sort of like fundamental primitive. I think a lot of that comes from these like really simple to grok on the consumer side. So something like Anchor, something like Anchor institutional adoption, and kind of like these fundamental pieces will just drive usage. And then you kind of have this like effect where, okay, I can now use my address for X, Y, and Z use cases. So I can, you know, take my traditional fintech app that happens to use Anchor, maybe like withdraw those funds and use them across like the DeFi ecosystem. And it has to be kind of this value ladder where you have this like first piece, which is just, okay, you signed up for an address inadvertently to like sign up for like a service, like a fintech app that supports Anchor, UST, and Terra. And now like with that ownership, you can access these like other services in a permissionless way. I think that's how it happens. I think that can definitely happen within the next 5 years. Like I would not be surprised just because the stepping stones are like a lot of the early stepping stones are just so accessible at this point.
Yeah, I would agree. I see it. I see it very similarly. I mean, I think this year, like maybe last year summer was the first time where I could see the path to mainstream adoption. Like when kind of entered the space in 2016, it was just very early, right? There's just a lot of infrastructure being built, like generalized infrastructure, and kind of didn't see a clear path. Was obviously incredibly bullish on what was happening, but didn't see a clear path. Whereas now, I kind of see it as just like inevitable. Like it's just going to happen. The enough of the pieces are there. The experience is good enough for those who use it. I think we've all had the experience of introducing some friends to crypto, and they start off with whatever single-digit % of their net worth in crypto, and pretty soon after, it's like over 50%, right? And that's both because number go up, but also because they move, even their stables move to crypto, right? Because they realize how much more useful something like Orion, like a crypto stable, a crypto dollar is than a real world dollar. You know, like a real world dollar is a pain to move around. The yield is terrible. You want to do anything, you have to call your bank. You know, it's just a totally different experience than a crypto dollar. And my kind of mental model is that I think the DeFi infrastructure is going to keep developing. But I think what the actual distribution method for DeFi is not going to be like institutions, so like institutional adoption. I think that's much further than we think. I think the adoption method is going to be stuff like the metaverse and gaming, right? Where something like Axie Infinity, I think, is going to be the distribution method for DeFi into developing economies, right? And I think all these games will be because games already have advanced economies. It's just that they're all closed and siloed off. And I think with the metaverse and crypto, DeFi is going to end up being the backbone of the metaverse, and crypto is going to be the backbone of the metaverse. And most people will be using, I think, like Anchor could easily be crypto's killer app, but I think most people will be interacting with it without even knowing that it's Anchor, right? They'll be interacting with it through a games UI, and games will actually become like the front ends, like the banks, right? With the back end being like all of the DeFi stuff that we've built so far. And then I think the next step after that is once games become big enough, then suddenly games have to decentralize, right? Like, because right now they're all running on centralized servers. their closed source code. And so I think that's what's going to really drive Web3. Like the need for Web3 becoming a real thing is when you have like these big successful games and you need like infrastructure for the metaverse to actually run on. So that's kind of my mental model is like DeFi happens first, then NFTs and gaming, then last like Web3 to get the gaming and to become the infrastructure for that metaverse.
Yeah, just to add here, it's always interesting and great to listen to Jose speaking about this. Some really great ideas. I also think that DeFi is probably even ready to cross this chasm to the mainstream. It's just a question of time. And it does make a lot of sense. It's like Jose just said, like when people start coming into crypto, they invest a little bit, they test it, but then they see I have in bank deposits like some amount of money and what it makes for me. And this is how much I can make in crypto. And I think right now we are getting to that stage that it's not like trying to chase the highest amount. It's more about having this stable earnings, stable APY that I can count on. And Anchor just fits really perfectly in this part. So we think actually Anchor is great in driving the mass market adoption. And of course, at Orion Money, we'll do our best to help expand it and bring to the masses. First, of course, on Ethereum and other chains, but then to the mass market, to non-crypto people. Because this is probably the first time that it's really starting to make business and commercial sense to anybody outside of crypto.
Yeah, I definitely agree with all your points. I mean, yield farming is definitely changing the game, right? I mean, and there's a few different ways to profit from yield farming. Some people go and chase the highest yield and take the highest risk, but for many people, if you're not full crypto, you don't really want to monitor your risk. You don't want to take the risk of that farm being robbed. You want something stable that you can kind of set and forget. Anchor is probably one of that. It's the same for me. I mean, I participate in yield farms and I don't really want to kind of move them around. I kind of want to set them and forget for a few months, for example, right? Yeah, I'm pretty sure a lot of people think the same way as well. And Jose, I really agree with you that games are probably going to be the primitive. I always like to tell people, like, if you think about the number of people who are unbanked in the current traditional finance system that we have, like look at the number of people in Philippines who do not have a bank account, and look at the number of people in Philippines who are playing Axie Infinity and earning SLP and having a digital wallet for the first time. They are being banked by a crypto. They have a Ronin wallet. They don't even know they're using blockchain technology, but our traditional finance has failed these guys in Philippines. We've tried to fix this thing via fintech, but it's clearly not working. But Axie Infinity and the games have given these guys a new chance of success or life by providing financial services, and games will be like the Trojan horse to providing all these financial services that the traditional finance can't provide to these guys. So yeah, thank you very much, guys. That's kind of the hour. I really appreciate you, three of you, taking the time to kind of explain the Terra ecosystem and sharing your insights to all of us here at CoinGecko, and to all 1,000 plus of you listening in to this live crowdcast. Thank you very much. Appreciate all of you. Feel free to purchase one of our NFT conference ticket. We are organizing an NFT virtual conference this November on the 17th and 18th November. There'll be over 150 speakers talking about NFT space, talking about the NFT. So go get your tickets before price go up. So with that, thank you very much, Vol, Jose, and Wagme for spending the time to talk to us today on the Terra ecosystem.
Thank you for organizing it, Bobby. It was great talk.
Thanks, everyone. Have a good one.
Yeah, thanks very much. Really good moderation as well. It was an interesting chat. Thanks, Bobby.
Thank you, guys.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.